You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good to be back, Jim.
I heard from the Spokane Silver Summit a lot of optimism, people talking about gold going up in price, not right now, but say in about a year, it'll start to skyrocket, say $2,500 compared to $1,200 right now.
Well, the timing is unknown on these things, and I think if people try to come up with dates when something is supposed to happen at a specific time, then they can get disappointed if it doesn't. Or worse yet, or almost as bad, they wait for that date to happen rather than accumulating steadily, and it happens ahead of time, and then they can't get on. So I'm always interested in hearing these things, but I'm less likely to take action because I heard of a specific date than I am to keep doing what I think is right over time to build a substantial position at lower and lower prices in terms of the miners so that I can benefit more quickly when the final turn comes. And
David,
if I'm wrong about the timing, I can still be right because I have a position.
David, you were saying you're a fan of the saying, if you're out of the room, you're out of the deal.
You know, that's a statement that is kind of a truism in the mining sector where, when deals are being made, whether warrants are being issued or special buy-ins for a new company or reframing a company, if you're not in that room and you're not privy to what's going on and you don't take a position, then you're not part of that deal. And so those of us on the outside, we can still be in the room and in the deal by doing our research on the good companies and choosing the ones that are best of breed and adding to that position as long as those fundamentals for the company are viable at lower prices. And it's kind of exciting to be able to do this. It can be frustrating and even fearful when prices are declining for a substantial period of time like they have been over the last few years. But at the same time, when you look at a company that you didn't go all in on because you thought it was the bottom, you added some, and it's now 30% lower. If you were already ready for that psychologically and financially, now you can add some more at the lower rate, and then you have a little bit left over in case it goes even lower than that, and you add still more at what we call stupid cheap prices. So it's all about having the ability and the psychological staying power to, add in tranches and to buy less each time than you think you should because you're not predicting. You're just adding because that's part of your plan.
David, you feel that once the precious metals start to move, it won't be just a slow, steady climb like a propeller plane taking off. This is going to be the space shuttle going for a launch.
I think it could very easily be that way. Now, it could be one of two ways, and because, my crystal ball isn't any clearer than anybody else's, but it could be a rocket launch where it turns on a dime, and I'm always watching for these telltale technical analysis signs that two of the most interesting and prophetic can be either the key reversal day, which we've talked about before, where the prices close above the range of the day before after going higher and lower, or the island reversal where you have a situation where prices seem like they're going to new lows and they leave a trading gap, and then the next day or the day after they leave this gap on the upside and they're gone and they never look back. So either one of those could happen. It doesn't have to happen that way, but that's the thing I watch for technically. But it could also be a situation where prices just kind of go flat and people lose interest and they grind along sideways for a while and then they start an uptrend. And the problem with that second situation is that none of us can really know for sure whether this is the beginning of a new major leg up or whether it's going to go up a little bit and then come back down again and retest. And so people, the people that don't have a position, they keep waiting and waiting. And so let's say silver is trading at $18. It goes up to 21 and you're looking for a retracement back to 18 so that you can get on. And then it goes up to 24 or 25 and you're waiting and you can see all this resistance above that. And so you're watching all the way up for a way to get back in, but then it never goes back down. And if that happens, you can literally wait out the rest of the bull market, which we believe when it finally gets underway again, as part of the larger secular bull market as opposed to the massively concerning cyclical bull market we've been watching over the last 4 years, the potential is so enormous that in these levels, it's really sad would be to watch that thing turn out and end up with 3-digit silver, and you're still waiting to get on board.
David, China last year was buying gold about all they could lay their hands on. What have they been doing so far this year?
Well, this year, you never get the exact figures until the end of the year, and even then you don't have it. But they reported just a week or so ago that the 2013 purchases were around 2,200 tons. Well, now, world production is about 2,500 tons. So the Chinese alone bought about, 85-90% of world production last year. And there are indications that the pace is very strong this year as well, too. It's more difficult to pin it down than it was a couple years ago how much is going in, because whereas most of the reportable gold that went into China came through Hong Kong, it's now allowed to come through Shanghai and Beijing as well, too, and those are not as easily tracked. And of course, all the gold that's produced in China stays in China in addition. So I think when the Chinese feel the time is right to let all of us know how much they actually have in hand, I think it might be pretty shocking just how much is out there. And so rather than wait for that to happen and then everybody decides to buy what's left, it makes sense to me, it seems, to accumulate the physical on a regular basis, so that we all have our little stash when the big news arrives and we're not left holding an empty bag.
China, of course, believes in long-term planning, not quarterly reports. So this could be part of a 5, 10, 50, 100-year plan.
Well, no doubt. And, they're not just buying the physical. They're going to markets all over the world, down in Bolivia in terms of silver mines, and Argentina in terms of silver and gold, and Chile in terms of copper. And they're taking those paper dollars that they've been collecting from us with all the debts that they're financing for us, and they're putting that money into the ground for the future. So you're exactly right. They're looking for the long term here, not the next quarter, and they don't have to answer to shareholders on a quarterly basis. So they have quite a bit of flexibility. And what they're doing now, when they finally announce their big plan, I think will literally be financially earth-shaking in the precious metal sector. We don't know when it'll be, but we know that when they finally do, it'll be a big event.
We know India's new prime minister was expected to remove onerous duties on gold. He hasn't done so yet, but will that happen?
It's hard to say, but the reality is that the desire to have gold and silver is in the DNA of the Indians, and they're going to keep accumulating, whether they have to get it legally or illegally, and certainly duties, slow that down on a legal basis a little bit, but smuggling will continue to make up for whatever that demand is. The smuggling will find a way to satisfy that demand.
And I thought one of the ways they're getting around the duty on gold is they're just bringing in the raw ore and then processing it in country.
That's true. They're actually setting up several processing plants to do that, and I think you're going to see more of that going forward. So it's pretty exciting, and we don't want to, now those of us that still have a position, especially in the miners, we haven't been shaken out, so the key now is not to get worn out.
David, thanks a lot for chatting with us.
You bet, Jim. It's been great speaking with you today.
My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HoweStreet.com radio. Find us on Twitter at Talk Digital Net. We're also up on YouTube. You can send comments about the show to info@HoweStreet.com. I'm Jim Goddard.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.